Cents Per Mile, featuring Charles Gracie, Paul Gibson, and Josh Haynes. Everyone knows the trucking industry has issues, but most people are afraid to talk about it.
Someone's got to do it.
With loads of recruiting and marketing experience and backed by the largest driver audience in the world, we deliver carriers the driver perspective, find solutions, and help make sense make sense.
Thank you for tuning in to Cents Per Mile. I'm your host, Charles Gracie.
And I'm your co-host, Paul Gibson.
Hey, I'm Josh Haynes, and I am not as short as Charles or Paul. Hey, guys, what are we talking about on today's episode?
We're talking about insurance companies, and generally when we talk about them, it's about as fun as a safety audit.
Yeah, I mean, it's definitely a thing that impacts trucking. Not a lot of people talk about it, but a lot of people talk about it, just not out loud. So we figured we'd just dive right into it and get a little weird. So speaking of diving into it, though, we are on Spotify, we're on Amazon, we're pretty much everywhere you get your podcasts. So if you could go like, subscribe, rate, whatever you do on that platform, it helps push us out a little bit. So you know, we can get further out there, do some more cool stuff, and yeah. You
can also do some cool stuff by going to centspermilepodcast.com, where you can suggest a topic to be a guest or even to be a sponsor.
Sponsors. Speaking of sponsors, who are our sponsors today, Charles?
We have two, and I don't need my glasses to show my age to see them because they're two of the best top carriers out there. We got Decker Truck Lines, where they're driven to be the best. Check them out at drivedecker.com, or Mesilla Valley, where moving freight forward with Mesilla Valley at m-v-t.com.
Yep, and then also F3 is coming up, so if you want to come to the biggest party in freight, click the link in the description, and you actually get a pretty sweet discount because it's all about who you know, and you know some guys.
The only ones to know.
Yeah, I don't know about that, but what I do know is it is time for the news. All right, so it's time for 10-2 News, where we look back on CDLLife and check out some of the coolest, most interesting, or informational articles from the past couple weeks. That being said, recently there were some police who pulled over a flatbed carrying what looks to be some heavy equipment, because underneath that heavy equipment was a kitten. There was a kitten just on a flatbed underneath some heavy equipment, just hanging out, took a ride. The kitten turned out to be okay. The police did get the officer pulled over, and the kitten has since been adopted and named Benson after the trailer.
So it's not that uncommon of a thing. It's actually more common than people realize. I actually went down a Google rabbit hole to find out it's more common than any of us realized. Some of these actually get pretty intensive in cost are there, because there's sometimes they got to come out and remove both the tires depending on where they're at in the drum. They like to hide out in between the duals. So it was kind of interesting to go down that Google rabbit hole.
Yeah, I'm really glad when you said it gets expensive, you didn't say anything terrible. Like, yeah, sometimes they just gotta, you gotta get in there and, sometimes they don't come out as one piece. Anyway, so speaking of insurance companies, in a semi-related note, congratulations, but also the future is weird. JB Hunt hit 50,000 autonomous miles going between South Carolina and Dallas. And from what I understand, it was 100% on time, 100% accident free, which doing anything in Dallas or the general DFW area and getting away with both of those things is kind of impressive.
Yeah, huge accomplishment for the initiative that they're taking here on this whole autonomous trucks, direction. It's also a little bit scary. Drivers better be maximizing those miles and those e-logs.
Well, I mean, even talking about insurance today, I mean, I think that's, I would be interested, because we'll talk about it a little bit here in a bit. I would be curious if they do have that kind of success rate, what that is going to look like from an insurance perspective. How long can you harp on the, it's autonomous, we don't really have that much control, et cetera, before it's like, this is pretty efficient. And, especially talking about aging drivers last week, like, how does that look from that end? Terrifying and wonderful.
It's one of those things that's constantly evolving, and I feel like we're going to see more and more of this, because there was just an article I was reading about another big carrier that's making moves in that direction. So driver shortage. This seems to be a direction they're going, and it seems a little bit more sustainable than recruiting orphans into trucking.
Yeah. Well, another thing though with that, real quick, is that one thing I noticed is that most of these companies who are doing that are not using Teslas. They're using other brands, which I don't know if that speaks to the rollout of the Cybertruck or not. But that being said, it is time to go behind the wheel. All right, so it's time for Behind the Wheel. We're being powered by CDLLife with the world's largest driver audience. Typically, we are able to ask drivers questions, and so we get real answers and real opinions from real drivers about real issues. So this week, though, with insurance being a little bit more cut and dry, we actually decided to check out some stats for, if you're watching and like this doesn't really affect your part of the job. They're interesting things that kind of, even from a recruiting perspective or a marketing perspective, can definitely kind of shape your opinions and views about things you might not have thought of. So the normal insurance coverage for just normal freight, like a normal truck, is $750,000. It's $1 million for hazardous and $5 million for over 3,500 gallon tankers. That is a lot.
Well, I mean, and you have certain states that are trying to ask for more, which is one of those things that's being talked about right now, is where do we draw the line?
Well, with that, the average truck accident payout is between $70,000 and $75,000, and that's average. So that's not, that's little stuff all the way up to like big pileups, and tragic accidents. So the middle is like $70,000, which is insane, considering all of the hazards on the road.
It's insane because some of it's self-inflicted by the industry. Being that I came from the carrier side, I've seen a lot of times where companies are quick to pay out just to make it go away. And in doing so, we've created this vicious cycle where people are actually expecting that. And then insurance companies have to raise their rates because these payouts are happening. And then trucking companies are like, my rates are going up. Well, yeah, play stupid games, get stupid prizes. And that's kind of this vicious cycle that we're in right now. So it's one of those things where it's like many things in trucking, it's self-inflicted.
Well, and I think there's a balance to that. And that's, I think, a lot of what we'll end up getting into. There's also a balance to this next little bit that I definitely think we'll get into after we talk to Tenstreet and after, an ad and some other stuff because we got to pay the bills. The top technology that trucking companies are getting discounts on their insurance for now. Like, just think about topics we've covered, things the drivers don't like that they complain about a lot. This is what trucking companies can get insurance breaks for: ELDs, dashboard camera monitoring, automatic braking, distracted driving mitigation, driver assist technology, blind spot warning technology, lane departure warning systems, adaptive cruise control, GPS fleet tracking, commercial navigation systems. All right, so we will talk about that in a little bit, but right now it's time to go behind the desk with Tenstreet.
All right, it's time to go behind the desk with Tenstreet.
Well, hey, I'm Josh with Tenstreet. It's a pleasure to speak with you guys today. I know we've been talking about insurance and technology and all these different pieces. There's a significant amount of risk in the space. We all know that. And we're seeing the industry really heavily impacted by nuclear verdicts and this cycle that Charles was talking about earlier in insurance. And so because of that, because of the lack of tort reform in many states, it's just a nasty cycle, and we want to help partner with that for carriers. CCJ referenced a study that was through 2022 and said, hey, the total sum awarded has increased from 10.3 in 2020 to $66.4 million in 2022. So it's a significant amount of growth in a short amount of time. At Tenstreet, we partner with carriers. We're wanting to leverage automation, our new product structured messaging, the value of interconnected solutions to say, hey, instead of just having all these tools and data feeds, let's put it in a platform. Let's let it work together. Let's tell a more meaningful story so that we can reduce risk, limit exposure, and paint that picture of holistic risk and driver performance, right? Historically, that's managed in different data feeds and really isn't aggregated to a spot that a carrier can can do much with it. And so from an insurance perspective, we share the same goals. And so Tenstreet will work with the insurer to say, hey, we want to put safe drivers on the road. We want to reduce risk, reduce exposures. This model, this cycle isn't sustainable. So it just makes sense for us to partner with the insurer to provide the best tools to their insured so that we can say, hey, when we're looking at risk and we're understanding this overhead that's the top 5 for a carrier, right? And one of these big expenses, how do we work to reduce that? What can we do? Well, you can partner with Tenstreet, put it in an interconnected solution so we can actually show you, here's where the risk lies, here's where we want to train and coach, here's where we want to make decisions moving forward, and really understand how to better manage our fleet and our safety.
All right, so it's time to make sense. We're talking about our main topic, which is insurance companies. But with that, one thing that I'd like to point out that we've pointed out on the show several times is that in most traffic situations, drivers are considered guilty until proven innocent. I mean, that's the same reason why our sponsor driver's legal plan exists. Like, that is a pretty common thing. It's pretty well known. And so I guess my question for you, Charles, is at this point, is it like predatory? Is it like, like your personal car insurance where like if you get a speeding ticket, everything goes up? Or if someone actually hits you and it's not your fault, it still goes up no matter what you do? I mean, because you've worked on the safety side, a lot of different, hats in the background. What do you think?
It's definitely a combination of all the above. I'd love to tell you that there's this perfect world where it's not the company's fault, it's not the driver's fault, it doesn't affect them. Just because it took place, their stuff goes up. It's more measured on an incident basis than it is on a fault basis on the trucking companies. And this is why you start to see these risk management companies and that really being utilized on the company carrier side to help them drive down those costs, because they have to do something to mitigate it. And not everyone's the jack of all trades in the safety department. They might be really good with fighting claims, but not really good at negotiating the best rates.
The other thing too, though, and this is pretty spicy. So looking at that list earlier of the things that people can, like companies can get discounts for based on, putting them in their trucks and having drivers use them. And those also being a long list of things that most drivers usually, deal with, but kind of complain about. Do you think there's any collusion in that with the different tech providers?
I will say this. It's not hard to connect the dots between that list and what you see outfitted in most trucks nowadays to understand why they exist in most trucks. It's the only one of the number one ways they can get a discount. But let's talk about what it takes to get that discount. What about the cost that goes into putting all that stuff in the truck? And then the cost of turnover that's associated with that stuff being in the truck. So, I mean, I think we're going to dive into this a little more with our next guest.
But real quick, is there a way to find out the list of what's going to be the next thing that's discounted so I can start a tech company to build that product? $1 million idea is the idea to have $1 million idea.
If we're going to start offering business advice and investment advice, we need to start charging more. We need a subscription charge for the show.
Fair enough. All right. Well, hey, Don, how's it going? I think you could maybe shed some light on some of this. How's it going, man?
I mean, I'm great. How about you?
We're talking insurance, and we're trying to make sense out of that, which is something we do on Cents Per Mile. Hence you being here. I might be a little biased to this because I may or may not have been guilty of coming in here and kind of trash talking insurance companies on every other episode. So I'd love to get your take on how the insurance is driving the market, not only for drivers, but for carriers in this current economy.
Okay. I guess I get that question all the time. Obviously, there's a lot of carriers out there. There's a lot of insurance carriers and then the carriers. So I would say the number one reason is some of the things you all were talking about. The rates are increasing because the claims are increasing. The payouts are increasing. I mean, if I'm spending $1 billion, but I'm only bringing in 500 million, like, so what companies are doing now is they're increasing to try to recuperate some of that money that's actually spent out. So they're going to increase the rate. For instance, if you have 1 million customers and they paid a certain amount of rates, but we had more claims than we've had premium coming in, they're going to increase it to try to recuperate some of those. So people think they're just going up on the rates because they can do it. It's not that cut and dry. And when the year is over, those actuaries get together and look at the law of large numbers, right? So they say, okay, how many claims in this particular area? How many people in this particular category have had claims? And then they start adjusting their underwriting guidelines based on the law of large number. How many things in this particular area have had claims? And then we're going to make our rates driven based on that, and we'll adjust our rates. So now we kind of went in the hole last year. So now we got to increase just a little bit, not a lot, but just a little bit, or make our underwriting guidelines a little bit more tougher for our risk. And then you're going to pay a little more to try to recuperate some of that money. That's just like a cut and dry way of explaining it to you, if that makes sense.
Yeah, no, it does. And so I want to kind of dissect this a little bit more. So, and at any point, if I'm missing something, please jump in there, because from what I know, there's a couple things that drive insurance. One, it's your drivers. Another one is your company safety record. Another one is freight claims. And then location plays a role in it. I mean, obviously, if you're in one of those areas that has a high cargo theft, you're going to pay a premium that's higher than someone that's in the middle of Bowdoin, Kentucky. So is there anything else outliers outside of that?
Yeah. So I gave you a large scale explanation when I first opened up. So those factors that you just spoke of contributes to that large scale I just gave you there. City, state, driving record, all those numbers are calculated every year from insurance companies, and then they determine, okay, we're not going to take people who have 1 year experience. We're not going to take somebody who doesn't have a truck over a certain amount of years. So all those little small things you're talking about right there play into the bigger decision making on how we determine our rates or who we accept with our insurance companies. So yes, what you're saying is states. If I go to Mississippi, I'm going to use Mississippi here. Mississippi may not have as many. The population may be smaller. So the risk is a little lower. You have a less chance of getting in an accident versus a Dallas, Texas, or Atlanta, Georgia. So those factors play a part in it. A person who's been driving 30 years versus a person who's been driving 2 years, those factors play a part in it. And then something that we never talk about is the agency that you're using, because agents have the ability to be able to present risk every carrier to the insurance company and say, hey, listen, they only had the CDLs 3 years, but they've been in the industry 15 years. Can we kind of give them a little break? And a lot of times the carriers, based on the explanation that you present to them, will give them a break or try to kind of, bend it a little bit based on the industry experience, may not be the CDL experience, whatever. I hear you all talking about all the risk reduction, risk management tools that a lot of carriers are, a lot of insurance carriers are requiring. Yeah, those are trying to mitigate more risk. Insurance is all about risk reduction, risk retention, risk management. That's what it's all about. How can I minimize the amount of claims that we have to pay for? So we talk about the driving record. You talk about the type of truck you have. Those things are factored into their decision making, how they, I guess, gear towards their rates.
Now, I couldn't have an expert on the show without tossing a jab out there. One of my biggest pet peeves as a recruiter is insurance saying, hey, these drivers are going to be a higher premium because they've had more than, say, 4 jobs in 2 years. When we work in an industry that the only time a driver can generally get a raise is if they make a lateral move. Can you kind of make some sense of that? Because right now it just seems like nonsense.
Yeah. It's almost like I was at a convention in Gulfport 2 weeks ago, and the guy was saying that we don't hire unless you have 2 years of experience. So the guy's trying to make more money, but he can't get the experience because nobody will give him an opportunity to get the experience, right? It's tough in that area, right? I mean, companies have to take a chance on them. I mean, and per carrier or per insurance. When I use the word carrier, I know you all use carrier as the actual trucking company. I'm using carrier as insurance carrier. Okay, per insurance carrier, some of them have guidelines that even if they have less than 2 years, we'll still accept them. Some say, no, if you don't have 2 years, don't add that driver to that particular policy because it's going to make your rate go skyrocket. But that's kind of one of those things. It's the discretion of the insurance company. So it's unfair, but that's the discretion of the insurance company. They have the right to determine who they want to accept, who they want to insure.
I could see MVR, PSP, criminal background. I could see all that stuff, but like number of jobs, that seems as like another, in my eyes, I look at this as a statistic that was put in place in order to justify charging people more or reducing the driver pool.
Or not accepting it at all. Like, you're not going to be able to get this policy if the driver hasn't had that many drive. So there's a form on one of my MGAs that we use. It's called a driver experience form. And that driver experience form is when the driver who's trying to be listed on the policy or added to the policy can fill out that they may not have had experience in a whole lot of jobs, but they've had industry experience. And sometimes the industry experience versus the driver experience can justify or satisfy the experience requirement sometimes. It's all about how you present to the underwriters and the person who's making the decision on the back end.
I was just going to ask then, if the carriers are in charge of having to justify some of these hires, how many carriers do you think actually do that versus just saying, well, they're just not going to qualify and just move on?
Conversations like we're having right now, most carriers don't just give up, go to somebody else and find somebody who will.
Just so they get all callous to the process. It's probably just like the VA. The VA is built off attrition. Either you go through it and you get your benefits, or you don't and you walk away with nothing. It seems like this is kind of one of those situations where they're betting on someone not making it through the attrition.
So what I do is, and I've learned this over the years of being in this industry, because obviously when you get different insurance carriers, those carriers have their different underwriting guidelines. I always do narratives when I present. I'll say, hey, this person has been in the business 5 years. They've had this amount of years. It's all about it's almost like we're agents, like us, we're lawyers trying to defend or present the case to the insurance companies to be able to get the best price and actually accept that risk. That's kind of what we're doing here. So it's little tricks like that. I don't necessarily want to call it a trick, but it's more so I'm presenting to make that insurance carrier feel better about accepting this risk. That's our job as agents to do that. So it's just tricks like that.
I used to think only recruiters had to do the backflips with the ball on their nose and jump through the burning hoop. But it seems like you guys are doing the same thing over there. If someone asked you to do it, they got to ask you, though.
Probably more. And most carriers don't know to ask. If they tell them, well, we can't help you. And a lot of insurance agents don't even want to put the work in. It's like, man, okay, I don't want to deal with it. And most carriers, they'll call and say, can I get a quote for an insurance policy? And the person said, well, you have too many violations. Well, you have this and you have this. As an agent, our job is to say they have violations, but it wasn't their fault. Or they have accidents, but it was somebody else's fault. Versus just saying, well, you have too many violations, decline the risk, whatever. It's all about the presentation to the insurance carrier on behalf of the carrier that you all speak on behalf of the carrier to get that policy bound. And whenever they come back with a quote because of a violation or because it's the wrong state or city, you can ask these carriers, hey, listen, I've done a lot of business with you. Can you go ahead and give them a reduction on that rate? So it's really the agency and the agent really job to do that kind of fighting for you, if that makes sense.
So there needs to be some conversations, and part of those conversations that are taking place behind the scene are right now. There's this huge push for the narrative of there's a driver shortage. And so on the recruiting side, I have my opinions on this. I know Paul's got his. From an insurance side, do you believe in there's a driver shortage?
100% yes, based on my customers.
And see, I got a surplus of drivers. It's just based on insurance needs. The carriers are like, we can't hire them. And I'm like, well, what are you looking for? Well, I want a unicorn that farts rainbows and can march in circles and do it for pennies.
Yeah. It's tough because you're right. I hear a lot of my customers tell me, John, I want to add trucks, but I don't have a driver for it. That's the biggest complaint. I want to add another truck, several trucks, but I can't find drivers. And then you all have business and organizations that provide drivers. Like, how do we connect everybody together and have this one hub? Because yes, I do hear it a lot. That's the biggest challenge of carriers, owner operators, is not finding a driver.
Well, and a lot of what we hear from the carriers is we can't find them because we're finding ones, but they're not going to meet our insurance qualifications. And a lot of times when I go in there and I'm looking through things and trying to make 2 and 2 equal 4, we find out that, their standards are here, but they're looking for this, but they're paying for here. And it's, well, if you're going to pay a 5-year driver 40 cents a mile, you're probably going to have a hard time trying to find a 5-year driver. But if you're going to pay a student driver 40 cents. Okay, maybe we're in the right range. So I think it's managing those expectations and also having these conversations. I don't think a lot of carriers actually take the time to have these conversations with their insurance providers and their agents to actually see, you know.
I mean, to piggyback real quick on something I said earlier, as far as the law of large numbers and like just the whole making the rates. Think about it. If they had a driver, we look at all the claims, they find out how old was the driver, how much experience he have. They take all of that data, right? So a lot of the rules that we see in place, like saying, well, I want a driver. Well, does he have 3 years experience? The reason they're saying 3 years experience because they have a lot of claims with people who have less than 3 years experience. Does that make sense? So it's like they're making those rules. That's how they make it. It's not they're just throwing it in the air. And I don't want to sound like I'm trying to defend the insurance companies, but I'm just trying to help you all understand.
I mean, it kind of goes into the job frame, but we get it. So if someone wanted to tap into this expertise you have, how would they find you?
Usher Risk Management Group is my agency. www.usherinsuranceGroup.com. I'm on Facebook, TikTok, Instagram, Usher Risk Group. So it's www.usherinsuranceGroup.com is my website. I'm on TikTok and I'm on Instagram and Facebook. And here. My number is 770-679-3634. That's my office location. We're here to help you. And my Google reviews are great.
That was a nice plug. It was brave to put your phone number on this. Let me know how that works out for you. And thanks for coming on Cents Per Mile.
No problem. Thank you all very much.
Mesilla Valley Transportation, founded by truck drivers for truck drivers. Why choose MVT? Well, it's simple.
I started off as a driver. Now I'm managing routes. With MBT, the sky's the limit.
Balance is key. State-of-the-art equipment, a strong focus on safety, and a family-driven company culture where respect and hard work are at the core. Mesilla Valley Transportation, where we care about you. Join our family today.
That was some pretty juicy stuff. And I mean, it's kind of along the lines of what you and I have had conversations about, Paul, in the past, is a lot of this all becomes one giant crapshoot for a carrier to navigate. You know, you need your network, you need your professionals, but you also need to advocate for yourself, from what we heard from Don.
Yeah. So, okay. So here's the thing from my perspective. Obviously that was super informative. Don was fantastic, but what that kind of leaves me at is it's the same idea. So from a recruiting perspective, right? Okay. So follow me in like this Charlie Day moment I'm having. So you get a driver, you get their application, you submit it to safety. Safety then makes a mostly objective, but sometimes a little bit subjective decision. Otherwise, you wouldn't be able to go back and fight for a driver. But they're doing it off of what their agent's telling them, which is also a little bit subjective, and what they're sending to the insurance company, which could then, in some cases, be swayed by the agent. And so that, while being objective, is still, there's room for subjectivity on 3 different levels on an application that you're not 1000% sure is 1000% true. That makes the approval rate make so much more sense.
With that being said, from a recruiting point of view, I will tell you this much. I've seen drivers' apps DQ'd off saying that they're falsified app, when really these drivers are paid to be on the road. They're not paid to memorize the dates down to the day. Take time, in my professional opinion here, take time and realize that they might be off a couple days. They might be off a couple months. I doubt it was intentional. Have those conversations, fix those apps. It's hard to find drivers, especially the good ones that are going to meet your insurance eligibility requirements. Take that time. Take the time to evaluate them on a case by case, and don't be callous to the fact of, hey, you might have tried 10 times to get a better rate on a driver, but if you can try that 11th time and get it, it was pretty much worth it.
I can also see some of those things too. Like, for instance, a lot of companies are weird. There's obviously the 10-year work history and all of that. And every now and then you do get that person that just has that little gap, like, oh, I took time off the road, and you find out they're in prison. I feel like I've encountered that enough personally that is actually like not uncommon. And so that's the whole thing too, is like, on the other hand, as much as I love to not give credit in the other direction, I mean, that also checks out too when you start to see trends like that, kind of like Don was talking about with the agents not wanting to do the work. But sometimes it's not necessarily that. Even on a safety level, it's like, I've seen this trend enough times that this might not be the case, but I don't know that it's worth diving into and doing the work to find out, which is sad. But I mean, it is what it is, I guess.
You know what else is sad? And this happens a lot for recruiters, but when you get on the phone with an applicant and they're like, I can start right away. I'm the best. The better you tell me you are at your job and the faster you can start, the more I'm realizing that I probably have a dumpster fire in front of me. And that's because these things pop up that aren't on the applications. And so these recruiters are in a tough spot where they're trying to make the company happy. They're trying to make the driver happy. And I think we find the answer somewhere in the middle, a little bit of understanding. Like understanding that the show's coming to an end. And with that being said, thank you for tuning in to Cents Per Mile. I'm your host, Charles Gracie.
I'm your co-host, Paul Gibson. At least I don't have that bad of segues.